Hello investors, I'm Stuart Kruse. Welcome to Market Mondays. And this week we're going to be focused on earnings because we're smack dab in the middle of earnings seasons. And in fact, this week we've got some of the biggest companies to report earnings on the planet right now. And it's even more important this time for multiple reasons. A, because these large companies have bigger market share of the S&P than have ever had before, and we are basically a week away from the election. And as of this recording, the Dow is down over 600 points because of the spiking coronavirus cases. So, if you've been watching anything I've been doing over the last 6 months, it's not a surprise that these coronavirus cases are going to be spiking. I don't believe it's a surprise that the market is selling off and is volatile given the lofty PE ratios that we're at. But let's look at some of the companies that are going to be reporting this week. And so I'm going to jump into the charts from our friends at White Charts. And here we have, that is reporting. We have Facebook, Apple, Amazon, Alphabet, Microsoft. And I'm going to cut to another chart down here, which shows you the S&P 500 and the top 10 constituents. And here we have those same familiar names: Apple, Microsoft, Amazon, Facebook, Alphabet. And why is that important? Well, if I jump to my friends at JP Morgan, have this lovely chart up here that says the weight of the top 5 and top 10 stocks of the S&P 500. So I just read off the top 5. Those are all reporting this week. This is the percentage of the S&P 500 that they are responsible for. And here are these percentage of earnings that they're responsible for. So if there's a miss in and of this group, and keep in mind, over 80% of the reported earnings have been reporting better than expected earnings. And so when the market expects better than expected earnings, you probably have to knock it out of the park in order to really do great. And if you just came in on average, or heaven forbid you miss, you're probably going to get taken out to the woodshed and smacked around a little bit. So expect, if anybody comes in under some of these great expectations now that we've had, that you're going to see some big downturns. Okay, so here we have the S&P 500. The top 5 names are comprising almost 30% of the market cap, and then 30% of the earnings. So we're going to zoom back over to our friends at White Charts and look at these companies that are reporting earnings. Again, this is a year-to-date chart. So the S&P is up 5%. While all of these names are up humongous. And if I show, let's even jump onto the PE ratios. And let's put these in a financial metric. Here we go. And I'm going to take off the S&P 500 for just to clean up this chart. And if we're looking at these PE ratios and the expansion of the PE ratios over the year to date, you've seen humongous expansion, and not the expansion of the earnings, more the expansion of the ratio. Okay, to get these high price returns. So that means if these guys miss some of their numbers or even come in to expected numbers, you could see some of these things fall pretty significantly. All right, other areas, let's clean up this chart again. In other areas, other companies that are reporting, these are also no small companies. We have Pfizer, 3M, Caterpillar, United Parcel Service, Boeing, and Exxon. Now again, this is a big difference between what we saw before. I'm going to take off the S&P. We know it's up 5%. Some of these other companies down 50%, like Boeing and ExxonMobil. These companies got crushed during the lockdown. But as you can see, the tech companies and the stalwarts are up, but the majority of the other big companies are actually down, and down considerably. You have UPS that's up because of the increased postage, but the vast majority of the companies that we'll see in the S&P are actually negative. So even though some of the headline numbers of the top 5 are doing great, the overall economy or health of the economy, not so great. And so if any of these big guys miss, some of these littler guys are going to have just stellar numbers to make up the difference. And, probably not going to happen. So this is what we're looking at. We look at the numbers, we look at PE ratios, we look at the up versus downside potential, and that's how we invest our money, our clients' money at Kruse Asset Management, and to make sure that you live your life with the odds in your favor.